Welcome back for your Money Saving Monday. All month long, we've been talking about the smartest ways to use your money now and into the future. And this morning, we're talking about paying down debt versus investing. I'd like to introduce you to Valerie Rivera, the founder and financial planner at First Gen Wealth. She joins us with some wisdom this morning. Hello.
Hi, thank you for having me.
So if you have a little bit of extra money hanging around, what is the best way to use that money? Do you pay down any debt that you might have, or do you invest it and try to grow it?
Well, I'm here to tell you the answer that you need to hear, not
the one you want to hear.
Exactly. The sexy answer is to invest first. However, if you have high interest debt, such as credit card debt, and let's be real, most Americans do, then it's going to make sense to pay off that high interest debt. So, for example, the average credit card debt is 25%. The average credit card interest rate is 25%. The average of investing in the stock market over a decade is 10%.
10%, yeah.
That's a 15% difference. Your money will never grow enough in the stock market to outweigh that interest that is being earned. So compounding can work for you, but it can also work against you.
And Americans are carrying an increasing amount of debt. So where do they start in order to pay that off?
There is a lot of shame and guilt around debt. Most people have it, like you said, but people don't talk about it. So they think they are alone. People are not alone. You are not alone. So it is first giving yourself grace to understand that you have to actually face the debt. Ignoring it does not make it go away. Opening the envelopes, looking at the online statements, creating a list of all of the amounts that you owe, what the interest rates are, what those minimum payments are, and actually getting a full view of the debt that you have to see, can you put a little bit extra toward that each month?
It makes a big difference.
Absolutely.
Last question for you before we go very quickly. What's the best way to start investing if, let's say, you pay down those credit cards and then you have that little bit of money left over?
A little bit of money left over. Think about low cost in a diversified investment such as an ETF, and you can use a brokerage firm, places like Fidelity, Vanguard, great low cost options to invest.
Don't throw all your money in one sexy stock. It's not going to work out for you. Valerie is going to stay with us now. She's coming up later this morning. We'll talk about passive income. Oh, and I like this subject, side hustles too.